Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily quick stock market analysis where we look at the technical charts and try to understand what happened in the market during the day and plan for a better trade for the upcoming day. That's tomorrow, April 9th, Tuesday, 2024. So we had the indices that's hitting the new highs today, especially the Banknifty after a long time. 3 months of retracement, and today you have a new all-time high on the Banknifty. But we have the banking index closing indecisive as compared to the Nifty, which had opened slightly bullish with a bullish close. Let's try to look at the charts. We'll come back to this wrap-up thing after we go and look at the candlesticks and charts. So it's a candle, it's a bullish candle on the Nifty. And we have a close of 153 points up, that's more than 0.5%, 0.68. And Bank Nifty, we have a gap up just like the Nifty had, but we closed, the Bank index closed indecisive with a doji. Doji is indecisive, small body with both wicks. Big bull bear fight happened. Basically, it's natural because it's at an all-time high and there is profit booking that may be happening, and then that's the trouble. Right, unless we see a green close, solid close above the zone, we still may be prior to a potential reversal anytime. So we have to be careful about that. Banking close is the trouble today. Till at the last few days, banking was performing and was forming solid candles. Suddenly, banking has fallen prior to the profit booking and set resistance. But despite the fact, Bank Nifty has made new all-time high, Nifty has made new all-time high above 22,666 on Nifty and about 48,581 all-time highs levels are pretty close by at 22,700 and at 48,700 somewhere near that. Right, so strong move, strong day. Intraday, if you look at, you can see that the Nifty gapped up and then was trending up until the profit booking came in the afternoon 1:30. And then market did recover from that and then consolidated to close more than 0.5% green. Bank Nifty also same, it was trending up until 1:30 when heavy profit booking came, but it consolidated and maintained that level after that. But overall, it was indecisive close on the banking index. Otherwise, if you look at the trend lines and channels, price has a lot of space more on the Nifty to move up towards the first and the second trend line channel tops. That means it can head towards 23,000 potentially. But Bank Nifty, while it's moving in that blue trend line channel towards the top, there is a lot of space. But if you look at this small inside trend line channel, it's at almost at the top of the trend line, so there could be some resistance that can come in. That's quite natural. And it may take its own sweet time to consolidate and then break out towards the blue trend line channels, the bigger ones, outside ones, top, which can move up to 49,500 or even 50,000 as well if that breakout happens. But the market decides when it does that. Does it slow down here and then consolidate and gain enough strength to break out to the top, or does it happen straight away in the next coming days? So it's for the market to decide. But there is scope for a lot of move up, but the inside channel resistance zone is where the Bank Nifty is close to indecisive today. But of course, about that factor. Resistance support zones, if you see, naturally in the Nifty, the all-time high levels at 22,700 would be the first resistance. After that, 22,800, 900, and 23,000. These are all rounding numbers where resistance could be felt. Downside supports for the Nifty would come in at 22,500, which is the rounding number, and after that, 22,300, 20 exponential moving average. And then 22,000 is a big rounding number and a 50 exponential moving average. Bank Nifty, the first resistance will be at 48,720 zones in the all-time high levels, and after that 49,000 will be the major resistance on the upside. And then rounding numbers will have resistance until 50,000 is reached. Downside, the supports will be the major support will come in at 48,500, which is a rounding number, and then the breakout zone of 48,200 would have some supports that can come in, and if that's reached 48,000 rounding number would have supports, and then 47,700 has a small gap support that comes in. After that, 47,400 20 exponential moving average support is there. Then 47,100 has got this 23 retracement support, so Fibonacci, and then 47,000 rounding number support is also there close by. But 50 exponential moving average is way down at 46,400. Market will not go that far until there is a big pullback that happens, which is not likely. Market maybe consolidate mostly in this zone and then gain self-ability to break out to the 49,000. But absolute bullishness is what is seen as of now. Let's get the wrap up. So we have a 0.68, that's 150 points plus move in the Nifty that has happened with the bullish close, and remember in the mid of 35% rally with just 4.5% on the Nifty. It was a gap up and trending up mostly. Banknifty it was also a gap up and trending up most of the day, and it's supposed to close again, but not that great. 0.18. It's only 8-9 points gain on the Banknifty, so that's why it's in the doji candle that's formed, and it's in the middle of a rally of 26%, where maximum correction was at 8.5%, rather deep it was compared to the Nifty. Intraday it was gapping up and trending up, and then followed by an afternoon sell-off which was quickly recovered, and then market managed to hold the positions, but Banknifty not able to gain as much as the Nifty, as both close green. Support levels we already discussed, I'm not revealing that. So let's see what is in favor of the bulls and the bears. So those that stands out for the bulls is the fact that the Banknifty has a record high. Nifty also has a record high. It has not maintained the price, the gains of the momentum and the trend and all that. Other side momentum is in the bull zones. The ADX is in the positive bull zones. Price is above the exponential 20 moving average. Had a higher low patterns there. Bull demands are seeing potential for further up moves on the short term. And major industry sectors are almost green except for the IT. So most of the bullish momentum except for the IT. And the major heavyweight stocks that contribute maximum to the indices are close green today except for Infy and the TCS IT stocks are not doing well today. And HFC Bank also was a flattish close. So green is maintained their all which is possibly goes in favor of the bulls. Opportunist futures is having a long build up on the Nifty and a short covering build up on the Banknifty. So it's overall bullish. The futures high build up to the and options PCR, the put call ratio is bullish and is greater than 1 on both indices. So absolutely we have another few days. It's a truncated weekend. The expiry for the Nifty and Banknifty both falls on the Wednesday, and we have a bullish futures open interest on the PCR options open interest that is seen as of now. So what's in favor of the bears? The Banknifty continue not to have a solid breakout green candle. It does not happen. We need that above the resistance zones, since it's especially part at the top of a smaller trend line channel, and it has come out of that with a short green candle to be confident enough for the bulls to bet on long. India VIX has spiked up today despite the fact that the market has moved up and close, gapped up and moved to positive. So that's partially an indication that the VIX has spiked contrary to what the price has moved. So today's move may not be real, and some pullback can be expected tomorrow. US indices is showing some that can bounce green close, but the fact that it had gapped down and fallen and retraced a little bit last week, it's in the middle of a big bull rally and some retracement, and more retracement could come in potentially. So we have to push up the packet because US indices are the other markets. Dollar is also spiking up and 104.34 in the rupees weekend and remains at 83.3, although it's showing some red. Dollar is spiking up, it's showing green. Crude oil has been spiking up, it has reached 86.33 at the top of the trend line channel, and spiking up mean that an oil importing economy like our country may not be great for that. Also some oil marketing companies may gain, so eventually it will impact negatively to the markets if the oil keeps on spiking up. Gold is also making all-time highs every day, and this gives a downside. It may affect the equity market and money could flow into a safer haven. Gold is spiking out. The Fyers were sellers today, 684 crores, while the buyers today was 3,470 crores of buying in the cash market for the domestic institutions. So the fact that foreign institutions have not come in as steady, heavy buyers is the fact that the market takes a lot of time to move up. Right? Once that comes in after the Fed rate hikes and all that, then it will be the real breakout towards 24,000 probably after the election. So just before the elections, no positive news that useful that they come in. So let's just come to the verdict. The fact is the market is showing strength, right? With the bank index also breaking out of 3 months of retracement, and there is a possibility of a big breakout that can come in from here, but it may take its own few time to consolidate. The fact that bank nifty did not close with a solid green above that resistance zone is of a concern. It makes us to be having tight stop losses because of the it's at the top of it inside a trend line channel, and some reversals from here could not be ruled out. But every time resistance zones has to be carefully watched out for. By investors, any dip that happens at this point in time has to be buying opportunities and quality stocks in SIP mode. But traders who had to wait patiently for the directional moves, especially the option buyers. Option for sellers, it may not be much favorable because of the fact that the spread difference between the blind volatility and the realized volatility is not that great for option sellers as of now. But non-directionals, OTMs, fiery OTMs, especially could still make profit, for non-directional trades, but spreads could work out. Directional spreads probably may be a way to go when the market is at this edge of breaking out, right? So there could be potential reversals that can come in any time because of the fact that the market has run a lot, and that's where the support resistance levels that need to bust out that we analyze. Keep that in mind and manage your risk. Always manage your risk. That's all that's in our hands. Have portfolio hedges and strategies hedges always. That's all I have. Happy trading, happy learning, happy investing. Bye bye.